Fed speakers that are scheduled to make remarks, including Jerome Powell himself on Tuesday when he's going to testify in Congress yet again. So this could be a very noisy week next week, especially with regards to the bond market, if it is indeed the case that the 10-year blinked in response to those Bullard comments this morning. I mean, we did see the 10-year go down as much as go down to as low as 147 basis points early in the morning before he spoke. But while he was speaking, it seemed to spike up to, let's call it something closer to 151 basis points. It's since kind of come down a little bit since then. Now, of course, I want to point out a few number of things. Bond markets can move for a number of reasons, and specifically today, there is quadruple witching, which we need to watch for. There's the expiry of stock index futures, stock index options, stock options, all these other things that could be contributing to some volatility in the bond market as well. So it's going to be very noisy on this Friday, especially maybe into the last hour of trading. It's definitely worth watching. Not many other Fed speeches on dock today, but again, next week, guys, could be very, very interesting to watch.
And so as we're watching these Fed speeches, as we watch the bond market reaction, I think back to past Feds, Brian, where, yes, you got some dissent, maybe you had the different Fed officials just saying different things, but ultimately it was the Fed chair who was making the decisions. That seemed pretty clear in past Feds. How should we be thinking about this Fed and all of that other commentary?
Well, I think, first of all, we need to lay out the idea that dissent is going to look very different in this type of Fed framework than it did in previous frameworks. And the reason why is because when we think about traditional dissent, what that literally means is that people were voting. However, we need to remember that despite the waves that were made in this week's policy meeting, nothing changed about the policy setting. I have to remind people that because everyone's talking about rate hikes because the dot plot changed, but people are forgetting that the policy itself in the June meeting was completely unchanged. There were no changes to that $120 billion a pace of asset purchases that it's making per month, in addition to keeping interest rates at near zero. And that's going to continue to be the case in July. No rise rate hike or the tapering to be announced that early. So the question here is, of course, well, if the decision is going to be the same, there's going to be no dissents. And we don't really need to count which of those 18 policy members are voting members to figure that out. What is interesting is that discussion about tapering is definitely diverging into many different viewpoints, and it's all going to hinge on where you see inflation. If you're worried about inflation running away, you want a policy reaction from the Federal Reserve that's going to tighten policy before you have to pump the brakes too hard, which explains why Bullard, for example, has a higher inflation forecast than the median on the FOMC. That's also coinciding with an earlier timeline for him to advocate for raising rates, which is why he's penciled in as 2022. There are 7 of the 18 members that penciled in at least one rate hike by the end of 2022, 13 of the 18 by the end of 2023. So this is going to be, again, a very interesting few weeks of commentary as all these Fed speakers provide their many different views on the economy, which would explain the divergence in the forecast that we saw earlier this week.
Brian, you think Bullard's comments were perhaps a little too aggressive and that they might be walked back from other Fed members in the coming weeks?
Well, I think that's a question about the timing of the Fed speakers coming out, right? I mean, I think what might be one reason for the sensitivity, if you will, in the bond markets is not necessarily that it was Bullard himself speaking. It's that he was merely the first one to be going out after the FOMC meeting this week to begin speaking. And again, who knows why the bond market was moving? Bond markets are going to bond market, as I say, which means that it could be the quadruple witching. It could be a number of other factors. But if they did blink, which, by the way, I mean, make what you will of a 2 basis point move. But yes, I mean, it did definitely blink while he was speaking. But I think broadly speaking, we need to remember that the Fed officials are going to go out in the next few weeks, and they're going to have a lot of different views. Obviously, someone like a Rob Kaplan from Dallas, who had already been advocating even before the meeting that he would like to have those discussions sooner and hinted that maybe he would even like the rate hike sooner than others, is going to be very different than what we're hearing from more dovish members, people who are advocating for keeping interest rate policies near zero. There are still 5 of the 18 policy members that see no rate hikes by the end of 2023. Very different view than some of the people who are advocating for something like 4 rate hikes over that time horizon. So this is, again, it's all about inflation. It's all about that viewpoint. And I think that's what's going to make the commentary so spicy in the next few weeks.
Yeah, and of course, we're just talking about the generic 10-year yield here, but it's really been the flattening along the curve that has created the most discomfort in the market, and that, of course, a response to if you have sooner than anticipated higher overnight rates. the front end of the curve will come up. The long end doesn't necessarily need to move with the same enthusiasm in that kind of situation. But of course, we all got so excited to talk about an inverted yield curve back in 2019. Maybe we can just put that aside for a couple of years. Mercifully, let the shape of the curve do its thing on the side, and we'll just stick to stocks here on Yahoo Finance as we tend to. All right, Brian Chung, thanks for helping us break down the week that's been in Fed commentary, and as you highlighted for us, a busy couple of weeks to come. Well, as we were discussing, certainly in the background of all this is what's happening with inflation, and of course a big component of inflation is what's happening in the commodities market. And we saw some crazy moves in commodities yesterday. We're seeing more crazy moves this morning. And Julie, this is where it gets to a messy point in the cycle when you start to decompose what inflation really is. Inflation is about the rate of change in the price of these goods, not necessarily the price of them. And so now if we come into a period, we've already talked about lumber down 20%. We've seen copper start to roll over. So now if we have corn and we have some meats and potentially oil following in this, I cringe to think that we're going to have guests come on the show and say the word deflation, but we all know someone's going to come and say it.
I'm sure that they will, but let's not talk about that too much until it happens. I do want to take a look inside the Wi-Fi Interactive and see, kind of illustrate some.
Hello everyone, to everyone who is online and everyone who will see this one later. Welcome to this stream. We're gonna actually be checking the market open as usual. Let's just hear a little bit about these guys. I missed it myself.
In the case of oil, not a lot. Look, I mean, the downtick on this chart is merely a blip. Will it prove to be more sustained? We shall see. But looking at some of the other commodities that we've been watching, here you have gold futures, which are really now just a little.
I'm fine, thanks. How are you?
The past couple of days, and if you look at the year-to-date chart here, the downturn that we've seen recently in gold looks a little more pronounced. Gold, though, not really as much a factor in the inflation numbers that you're talking about. Copper, though, is, and here too, that downturn has been a little bit more pronounced over the past month, and then accelerating over the past week, as we anticipated, and then in the wake of the Fed. And you were talking about the commodities too, so why not? Let's look at some of the commodities. Corn prices, you can see, well, the chart looks a little funky because it's corn, it's not.
I'm not really interested into that. I'm not interested into the corn prices. Let's check some of the stuff. Fed president, Fed policy is still a little more hawkish. Well, yeah, 3D print to help me more regular interest in his stock is ebbing back to pre-pandemic levels at the open. Nasdaq in a slump. Rate rise on Bullard hawkish talk. Oh, this guy Bullard. Every time he talks, things move. Every time he talks, things move in the opposite direction. I mean, the Fed chairman just talked, so just close your mouth, man. Just close it. Let us just live a little bit. What did he say? Did I miss it, guys?
Yeah, guys, I'm just looking at I'm looking at oil. One commodity that hasn't been swept up into this pullback of sorts is, in fact, oil prices. And it looks to be oil is taking its cue from two things. One, supply data has been very bullish for oil traders this week. And two, also taking its cue from the economy, I would argue more so than what we're hearing on interest rates. So the global economy, in many respects, continues to surprise to the upside. And we're seeing oil prices continue to have that bid. Brent crude is up about 55% so far this year. And I just have a story hitting Yahoo Finance right now on our homepage. Just looking at the note put out this morning by Goldman Sachs' head of commodities research, Jeffrey Curry, very much a market mover, saying he's looking for near-term oil prices to rise about 15% to $80, but sees the case for oil prices even going higher than that. He was at a conference late last week suggesting oil can hit $100. So I wouldn't be surprised if you start to see some forecasters come out calling for super spikes in oil. We haven't heard that in a while, Miles, really in a couple of years. I think it was Goldman that ultimately coined that term several years ago. but we could see that just based on where supply and demand stand right now.
So this is the one. Can be trusted. Disney call of a deal to buy Twitter. Suicide. Nasty straw. Ooh. Ooh, that is a not. Where is it? I thought. So Fed Bullard warns risk remain high and U.S. economy may slow more sharply than expected. Someone just stop interviewing this guy. I mean, obvious that where he's invested in what direction. Yeah. Anyway, that's about that.
One-time spike in prices sticks. Right now, all we can do is guess at that, and everyone has their view on how that might shake out. The market right now, looking at a number of those prices as we went around the commodities world, suggests that those pressures may not
Let's check
stick
NASDAQ
quite as durably. Oil is an interesting one if it's a pretty simple.
Let's check NASDAQ, guys.
Play on the overall, global, call it global shipping, global transit type cycle. But then you get into the electrification of cars and all that kind of stuff, and I think that raises a lot of questions. But again, copper here telling two stories at the same time. Clearly, bottlenecks, that surge into the spring, not enough stuff to go around in any kind of setting, but also how do we price the new cycle? And I don't think we're going to get any clear answers to those questions for some time, but we can debate them every day here until then. All right, coming up on the other side of this break, Rick Newman's going to stop by to tell us about the Supreme Court's latest ruling on the Affordable Care Act and why he says.
I mean, yeah, I don't know when Bullard's actually comments came out. It's surprising that it's not here. More hawkish. I think this is the one. I don't know. I mean, the Fed chairman spoke. He spoke. We had the rattle, and now it should be done. Okay, nothing has changed. The rate is not changed. So what? Nothing is gonna be changing at least end of 2022 or end of 2021 and then 2022. So I don't know. I really don't know. But this guy, every time, last time he talked, and I mean, the 10-year bond yield is not moving that much. I mean, it went crazy. It's now slowed. Yeah. Just almost the time when we thought that we are gonna actually have a little bit of breather. Of course, we're not gonna have that breather. We have 15 minutes before market open, but there are. Let's just check some of the. So Nasdaq down, yeah, clearly. S&P down. Euro USD down again. Bitcoin down 37,000. Ethereum is 2260. Gold is down more or less. I don't know. Yeah. I don't know. I felt that we're gonna have like a couple of good really weeks, and the point is that if we can get a little bit of movement in the stocks, that means that we can actually offload some of the stocks there, and we can actually take some profit. There are many of, at least my stock, and I know many other people's stocks that have been in downtrend for long, and it has been just starting to gain some momentum into getting into places. But yeah, it's a very jittery market, really. It's you turn your head around and things are different. So let's look at, yeah, VIX is up 11%. The hell. All right, so the downward direction, at least not very much. none of that I mentioned. Mara, Genius, Brand, Virgin Galactic, Unity, Riot. There are stuff that are going down. Square is down, Corsair Coin, and on the upper side we have, of course, Wix 11% up. It's 19.8. Adobe. Oh, this one had earning. Yeah, this one had earning. MC up 2%, barely up. Veil, Huya, Sarnini, Voxel, Nvidia. Nothing really that much green, honestly. But I would say mostly on the red side. But again, not very crazy move. I mean, I don't know. I don't mind really a little bit downtrend. I think it's okay. It's just that I feel always that people try to make a stories to see some moves, especially newsletters, because they're gonna get some clicks. I'm very well, man. Thank you for asking. How are you? That's a very typical things to be, but church it down to it, but make it to outperform premium valuation. Dividend select. Okay. All right. So we have 10 minutes before the market, and let's just follow up. Let's see what are the things that we are having right now, and what are these guys saying? Obamacare, nothing interesting for us. Today, actually, I wanted to talk a little bit more detail about some of the stocks that we were talking about. I don't know how much you will be interested in that, but generally, I guess I really want to talk a little bit about some of the stocks that I think, like mostly growth stocks, that I believe gonna be doing well. So we're gonna check some of the forward P ratios together if you guys are interested into that. Let me see. I'm trying to find that one. Yeah. It is interesting. I know that. That it is interesting, but we can just do it one at a time. So here's some of the stocks that I want to put. I mean, there is 9 minutes before the start. I can get some of my stuff in order. Let me there and here. Of course, you can always ask, man. No problem. I would be happy to answer those. I would happily do that, so no worries. Is this a repeat? Yeah. All right. Let me check this. Let me check these. All right. And this one, yeah. All right. So some of the stocks that I want to talk to you today are in this list here. So we checked some of these yesterday, but today we're gonna have a better look at them by actually looking at some of the forward P ratios. Of course, we will try to find something. I mean, there has been a couple of days that I wasn't able to get a good profit at the market start, so we try to do that. That requires us to actually be able to find some clear direction in the market, and unfortunately I don't see it. There are more in the sell, but then when I look at 1 minute, Charts. Let me bring my 20 EMA. Actually, there are some of those stocks here. So Vail is down. Riot. I want a little bit more a clear direction. What is this? God. It's moving. Okay, this one is down. This one is down. It's down to 39. Nothing really strong. So I'm looking for something which has either in buy or in the sell direction. So the market is generally in the sell order, and again we have the problem with selling because eToro doesn't offer selling for every asset that is available there. Actually doesn't offer for many of them, so that's a problem that we have. If market was open, usually NEO I really like to do. Let's check AMC. See AMC. AMC is up. Doesn't feel like a very crazy move. I don't know. It doesn't look good. At least it's not the setup that I was looking forward to. A stock for drops.
Forecasts. I think what the Fed is really responding to is that environment of slightly faster rebound in economic activity, faster data on inflation, maybe a slightly longer transitory phase of elevated inflation than many economists expected. And so the Fed quite reasonably, quite rightly, has to adapt and adjust to that. We saw higher growth forecasts, higher inflation forecasts in Q4, and really what's got the markets in a little bit of a tiz is this projection for bringing forward of interest rate rises in 2023. So, I mean, as we digest that, I think it's important to set those forecasts alongside Mr. Powell's comments of taking some of the projections with a bit of grain of salt. There is a significant amount of uncertainty about the outlook. The current environment is kind of reminiscent of the Bernanke Fed in the aftermath of the financial crisis, where Mr. Bernanke struggled to keep some of the other Fed members in line and on message. So as the Fed begins this process of talking about tapering, there are going to be these phases where sometimes there are some communication challenges, where the Fed is talking about risk management, that becomes a little bit more of a challenge for the markets to digest as a message. I'm not sure too much has changed in terms of the outlook this week. We're still in the phase where we're talking about tapering. We're looking forward to Jackson Hole and the September FOMC, where we expect the Fed is going to lay out the playbook for what the QE taper looks like, most likely starting with MBS and then delivering that program from the end of this year through 2022. And I think that's still the right working assumption to have. We don't anticipate a big taper tantrum or overreaction in the bond market, but I think the environment does leave us still in an environment where the economic expansion is continuing, and we should expect higher bond yields moving gradually higher over the next 6 to 12 months.
Joseph, Bullard's comments this morning, President Jim Bullard's comments this morning, do you think that is the growing consensus with inside the Fed? And if so, what does that mean to the markets?
Well, I think what the market has got to focus on, and it's not always easy, is the evolution of the economic expansion and looking for signals ahead as the tapering debate and dilemma becomes a bit more front of center, particularly moving into the August-September period around Jackson Hole. We have had a phase where the data has been a little bit all over the place, lots of one-off effects, unusual effects, base effects in the economic data. So I think we have to manage that by really listening very carefully to the core members of the Fed, Mr. Powell, Mr. Clarida, the inner circle. And that gives us I think the insight in terms of the broad trends. Clearly, we're in an economic expansion. The data is going to continue to improve in GDP. Labor markets are going to heal, but that can take a little bit of time. And that's why this focus from Mr. Powell, Mr. Clarida, the other members has been emphasizing the fact that they're willing to look through some of the transitory pickup in inflation, focusing on this average inflation targeting message as the overarching philosophy. And they're really going to take their time in terms of exit from policy. So I think it does mean higher bond yields, but I wouldn't be too alarmist in terms of the messages that we've seen this week in terms of viewing it as a really meaningful change in the outlook. I still think we're left with a strong economic expansion, bond yields moving higher, and then value parts of the equity market are going to continue to perform well on a relative basis.
So on that last bit, Joseph, we've seen a little bit of muddle, I guess, in the so-called reflation or reopening trade this week, right? We've seen a lot of commodities come down, but we've also seen sort of the tech underperformers start to reassert themselves once again. Do you think that trade is done? Where do you think we are in terms of that reopening trade?
Well, the reopening trade has really been running at pace in markets and also in the economic data, particularly in the leading economies, the US, China, industrial Asia. I'm here in the UK, we're a little bit further behind in the story, but I think the UK and industrial Asia and China are really moving into this expansion phase of the business cycle. So we've had the instant recovery, the big bounce back. We're moving into a phase now where economies are going to continue to perform, but it gets a bit choppy for markets because expectations, investor optimism has moved quite a long way. It's quite hard to surprise positive investors, but also because we're seeing policy is in play. Policy normalization is being talked of in Asia. We've got talking about tapering at the Fed. That creates some confusing signals for investors, and it creates a slightly more a tricky set of market and macro narratives for us to trade. So we've got to be realistic about the kinds of returns that are achievable at this point. We've had a great half of the year in the first half. I think maybe it gets a little bit trickier for investors in the second half of the year. But what I would try and do as much as possible is maybe try and look through some of the noise in the data, some of the noise in the day-to-day commentary, and focus on those core trends. Economic expansion, labor market healings taking place. That does imply higher bond yields. And it should be a phase where value names, cyclical names, laggard parts of the equity market, even Europe, is going to be focusing and performing really pretty well on a relative basis, but still favoring equities over fixed income is going to be the right strategy, I think, for investors during this next period.
And, Joe, finally, before we let you go, something you flagged in your note to us was looking at the chip shortage and some of the structural drivers around that kind of trade. And it strikes me, and it always does, it happens every so often during the flows of an investment year. We start talking about the Fed and macro, and we forget some of these fundamental drivers. But, ultimately, it seems like that trade, and specifically, as you note, as it relates to data center build-outs and electrification of auto fleets, that trade still remains intact. Is that one of those themes in the background that you're kind of talking about that remain important to keep in mind when we all spend a week being Fed experts?
Yeah, Miles, I think that's a great point. So it's very easy to be focused on what's going on in terms of the 10-year bond yield, being Fed experts and talking about those trends, and then trying to boil down the market view to some simple value versus growth axis. In reality, as I say, I think it's going to get a little bit trickier going forward. Expectations have moved a long way. Investor positioning's moved a lot. That narrative around inflation has been traded very strongly by the market. So maybe the best strategy is taking a bit more of a barbell approach. And trying to be nimble in markets is of course, a good style to take. But for many investors, taking a bit of a barbell approach, focusing on some of those unloved cyclical valued names, which have lagged and could catch up, is part of that strategy. But alongside that, as you say, there are some really important megatrends that are taking place in tech, in green tech, in the tech sector in Asia in particular as well, developments in semiconductors, and all of the things that we've become focused on in terms of medium-term trends are going to remain important. And it's really important not to overlook some of those issues. So if anything, maybe the lesson of this week is a reminder that some of those themes are there, they remain in play, they're going to be big multi-year themes for economies and for investment markets. And we shouldn't overlook some of the developments that we're seeing in electronic vehicles or semiconductor space, in the tech space generally. We certainly need to be maybe adopting more of a barbell approach to make sure that we capture some of those growth themes alongside some of those laggard themes in the investment portfolio.
All right, Joseph Little, strategist over at HSBC Global Asset Management. Joe, always great to get your thoughts. Thanks so much for jumping on this morning. I know we'll talk soon.
Thanks a lot. Bye-bye.
All right, let's take a look now inside the Wi-Fi interactive touchscreen, get a look at some of the things that are on the move here. We continue, earnings never ends. Adobe is a company that we're keeping an eye on. I know Brian Sazi, you flagged that for us earlier.
All right, so the market open, the stocks are slightly moving higher, but not that much. So it's a little bit of mix. The top losers are some of the crypto, Ethereum, actually, NDX, Wells Fargo, like again ADA, Bitcoin, and the top gainers right now are Workhorse actually. Okay, let's see if I can actually have something Workhorse. Of course. So this is that. I'm still thinking we can keep an eye on Workhorse. If it comes back to 20 and then it starts to move up, then we can actually have a look at that. Nintendo, Clove, Adobe, DocuSign, Voila, these are actually going up. I mean, the stocks now really moved more into the green side, but this looks like one of those greens that maybe it's not persistent, but we can actually wait and see a little bit how it turns out. For now it sounds like to be the case, but let's see.
In the green here. And I also wanted to check on the sectors. They're all in the red today in a big way. Energy leading the way downward along with financials as we see continued rotation out of the value groups, and also as we've seen some rockiness as of late in what we've seen for energy prices. But I also wanted to look at the 5-day here as we talk about that rotation that we have been seeing. So XLK is the information technology or computer sector ETF. That has done the best on the week. Materials is the XLB. That's done the worst, along with the financials and energy and industrials. So the rotation relatively clear here, although not much in the green except for those tech stocks. All right, let's circle back on over, speaking about tech stocks, to what's trending in the S&P 500 and on yahoofinance.com, I should say. And here we've got Adobe. It is up by 2%, even as we see this pullback that's been going on in the market. And indeed, Sazi, it came out with earnings and a forecast that beat estimates. So still reactivity to actual earnings numbers. It's sort of not getting swept up in the overall market move.
And right, Julie, Adobe is the second most popular ticker right now on the Yahoo Finance platform, and deservedly so. The quarter last night for the company was again very strong, 23% year-over-year sales growth, continuing Adobe's pace, where almost seemingly every single quarter this company grows sales over 20%. They came out, they beat on sales, they beat on earnings, came out with upbeat sales and profit guidance for the current quarter. Not much else you could do here if you're the executives at Adobe, and hence you're seeing Street continue to stay long the stock. BMO saying the results are they're seeing very positive metrics for Adobe. They're seeing a lot more of its products and services on more devices. They're also seeing the return of corporate spending, again, benefiting the likes of an Adobe. So all in all, not surprised by this move here.
Yeah, it's interesting looking at this chart. It's not been a great year-to-date chart. Finally, before we go to break, because I noticed it here on this trending page, 23andMe, which, as we talked about, just came public, closed on its SPAC deal.
Yeah, all right. So let's have another look. What are the main movers here? Actually, we have We have Clove.q, Zillow actually moving. I just got a little bit of Zillow, but not much. Let us actually check Baidu and JD. Those are, yeah, Baidu is down a little bit. How about JD? JD down as well. I don't mind actually adding to these two positions also. Yeah. So I was actually having a look at PDD, and it looks like a good company. We can of course have a look at it if you guys are interested. If it doesn't bore you out, of course. But it's a very interesting company in my opinion. We can have a quick look at that. So PDD is actually, so the growth rate for this one will be so that it will actually, from current ratio, it will have a constant aggressive growth actually, which in 5 years you are looking based on estimates around P of 12. So in my opinion, that's a very good number. So this is more growth stock when you compare that to Baidu, where Baidu already is a 20 P ratio, and it has a smaller basically growth rate, slower growth rate, but it's a little bit more how to say stable in that sense. I can actually see both of them in my own portfolio, but let's see how it turns out. Today let's check at Etsy. That is I think another one in our list, so we are gonna keep an eye on Etsy as well. It's down 0.5%. What are the other losers of today? So crypto basically right now, where is Bitcoin? We have Bitcoin at 37,000 almost, more or less. We have TRX again 2%, ATH is minus 4%. So as I said, I still think that Bitcoin has some time. Okay, this one we already sold it and we already got the profit, so that's not about this. But I still think that crypto has a little bit downside movement before it can go up, which is reasonable. It was on a tear recently, so that is that. UNH is another one. Ooh, it went down 6% yesterday, I guess, and again down today. BlackRock, Sumo Logic. It got bounced by the 200 EMA. It's still in an uptrend, so I expect this to come back up if Mr. Jim Bullard allows us actually to enjoy the market a little bit. Morrow down today. Right, so I guess many stocks started to move toward the upside. We can clearly see that. Zillow slowed down a little bit, but again, that isn't one of those companies that I think, okay, so we went green, at least I'm gaining right now, and it's in a relatively fast pace. Any news? Interest size ebbing back to pre. Yeah, we read about these. Chinese marketplaces, international prices, IPO, fund manager. One of the very, I mean, right now I think there are many good opportunities here and there about stocks. Let me check again. Google. Yeah, too high for me now. Okay. I have to correct myself. Still, it's much cheaper than many other companies that we own, but I think that we're gonna have some sort of a pullback on Google along the way. But I'm already invested in Google, Microsoft, Amazon. These are already have enough money in them. So I only want to add them if they have a little bit of pullback. So that makes more sense. I mean, this one here was a good one. This one here was a good one. I mean, good places to add, but we'll get again. We'll get it somewhere. Okay, Alibaba is barely up. It was down. Actually, Coinbase. I'm just waiting for the crypto market to get to some sort of a bottom, and then we can actually start adding Coinbase, because I still think it's a good company in long term. Coinbase in 5 years, I think, has a very interesting path for that. Let me see. So I think for next year it's expected to be down, but in 5 years it is gonna still be a very good company from earning point of view, and considering these valuation. Let me check also Redfin. This is one of the other companies like Zillow that I had in my list. Don't I have Redfin here? Redfin. No. Why I don't have Redfin? It was here. Got deleted somehow. Redfin is down actually. Why? Yeah. Yeah, it's selling probably still, but below 50, absolutely, absolutely buy this below 50. If it gets to 40, absolutely, this is a very good company. I would say Zillow is more stable compared to this, but this one has higher growth ahead of it, so that would be interesting to see which one do what. Let's have a look at these.
Now you can. The European Union is going to be opening things up to travelers. We'll talk about the implications next.
All right. I think we missed Jared. Yeah, sounds like stocks slightly are moving into the green zone. Redfin. I'm waiting for Redfin if I can, but honestly speaking, right now Baidu. I think Baidu and Alibaba, JD, these are right now. Honestly speaking, I think JD is the best of all. Yeah. I mean, obviously I can see to add to JD again. Let me check my list where I have at 69. 69, will it get at 69? It can get, but we don't know. We have Qualcomm, which is down again. So we're gonna be a little bit patient with Qualcomm. I've added before to Qualcomm, so it's there, but I think we have to be a little bit more patient with it. Okta is coming back. Okta has a long way before getting into profitability, and so basically it means a lot of risk. Compared to Okta, we have, let's check actually. What else can I look to Okta? So when we look at Okta, we are basically looking at, so in 2024, they are going to get profitable, and still you can see 2026, its P ratio, with everything in mind, with all the growth, it will still be like that. So when you go to basically 2027, so 2028, you're still above 20 P ratio. I think that's a very, very long way to getting to profitability. I still am thinking to get something out of the trade. I'm not gonna wait on this to get it for long term. At least I think there are better plays to go for the long term. What else do we have here? Let's check again the gainers of the market. We have AMC up 5.8%. Very good. It's at actually a 64.65. Very good for AMC. Clove is actually up 5.7. Workhorse is 3.9. So many of actually these momentum stocks are up. So this was despite what we were hearing before the market, but that's a good thing. What else? SoFi. We want to actually check SoFi again. I think SoFi has a very interesting growth prospects ahead of it, and I actually really like the business as well. I haven't gone really detailed in it, but what I've read very briefly, it sounds like a very interesting process. It provides, financial of lending, spending, protecting money. Also provides really software for those purposes. So really good financial software in that end, and the business plan sounds really solid. I will think of this if it comes back a little bit, but honestly speaking, with the current, let's check it quickly. I think in 5 years or even less, it gets, let's check. So next year, in 2022, actually it gets positive. So I was wrong. And then look at how fast it gets to reasonable P ratios. It's crazy. It's crazy in my opinion, and it shows to be a very interesting point. I am on 4-hour chart. If there is a cross, I will buy, but let's see if it gets bounced here or not. It's not moving right now very much, but we're gonna have a look at it when we get there. Also, in my opinion, Etsy is another one. AMD is moving up, I guess, but AMD also one of the cheapest of these higher growth. Oh, okay, we have basically a buy point for AMD. Okay, the shorter long time frame is still above zero line, but we had the cross of 20 EMA over 200. The movement sounds like a break. Is it? Yeah, it sounds like a break from the downtrend. Not completely. I would have been more happy if this was happening here, but we follow it today. But I think AMD is actually at a very good position right now. I'm still not really sure about today's market, so I will wait a little bit before going in. But I'm probably gonna add a little bit to AMD. Okay, PDD is up again. 5%. I don't think that's the one. I don't really think that's the one, but we can of course always look. We can always look. Why is that? No, for me, it depends. I mean, some of these stocks obviously are much better to just be in it. Like I only trade with them. So, but some of them are more long term for me. So it depends. I do both. So let's check FTCH. FTCH. Let's check Farfetch. This is more in the luxury kind of market. Yeah. Not really. Yeah. I mean, of course, that means that we can only think of it as a trade, but not for long-term investment. Okay, let's go back to some of our main stocks. We have Square, it's barely even. DraftKings is not convinced where it's going yet. Microsoft is down 0.5%. Visa is down. I want Visa, but I want to buy it at around like 220. But I don't mind even if I don't buy it. But usually if it goes there are other stocks that I can get. Roku is up 2.3, Okta is up, Vail is up. Doyu is not properly. Is there any news for Doyu? Let's check Doyu. It seems at a very interesting prices. So Doyu is basically provides platform for interactive gaming on PC, mobile devices, and so on. And so next year you will get into profitability with this. Let's check this and net. And how about this one? Okay, this is much more stable with lower growth basically. Doyu has good growth rate, good cash flow, and there's nothing really as a red flag. But NetEase is actually a much safer player, if I can say, in that end. I think it's too expensive right now. Was it? Okay, so for me this is still not a buy. This is actually more in a downtrend. But again, it is not really clear even at the higher time frame. For a long time it has been moving sideways. So if it comes back to, man, this thing sometimes you trade something and you're very happy, but then when you look at it at the long time, you see that, of course, you have to understand, if you want to keep a stock like this is for almost a year. So if I wanted to keep something for a year, and I mean, you don't know if that is really the best investment. So I would have made maybe 30% more, but I already did the trade and kept it for 4 or 5 days and made like 10-12%. So not 10, I think this was 7 or 6%, honestly. But again, I would say time-wise, then you can use your money for something else. I mean, I basically believe that trading is more profitable, but with investing, it's easier. I mean, that's why I think you should do both of them. That's my opinion, at least. Right. So what else? We had do you is yeah. Adobe is a very good company, but it's expensive. I mean, let's look at Adobe. So you have it's right now PE of 46, next year 40, 34, 29, 25. So when do we get to somewhere around 20? So at end of 2027. Yeah. But because this is a good company, it really makes sense to keep company that has a, you know, guaranteed growth rate. I think you should have always some of these more stable companies in your portfolio, but you cannot go for all speculative things will happen to them usually. Right, so the scalar, I was looking at Palo as well. Palo Alto is network cybersecurity kind of play for me. It's yeah. All right, let's go back to our list. Let's check Zillow again, or even Redfin. Actually prefer, I think in today's kind of environment with the rates and, you know, inflation and these kind of stuff, it's really better to go with safer options. That's why I want the market to go up a little bit so that I can dump some of my stocks that I don't have that much not that I don't have confidence in them. This scenario will be changed if inflation wants to persist and stay. So you have to be prepared. You should reduce your risk. That's my opinion. So yeah, that is about that one. Etsy is 169. Qualcomm is 133. Baidu is 185. Palantir is 2550. Alibaba to 12. Okay, let's check Q. Where is our? Okay, this is actually hitting our line here. Let's see if it comes back or not. CRM, this is actually one of the most reasonably priced companies based on the estimates. This would have been a perfect entry. Missed it. So yeah, it happens, not a problem. There's always other trades.
Set for a pretty steep tumble for the week if it keeps up with the selling that we are seeing. But as we've been talking about, it's a witching day, which can mean more volatility. For the first time, the United States officially marks Juneteenth, the end of slavery. We'll talk about how companies are approaching the new federal holiday. Amid the hubbub over Robinhood earlier this year, another trading platform got rid of payment for order flow. We'll talk to the co-CEO of Public.com about how that's worked out. And as New York City fully reopens, we'll talk to owner and chef of Vegetarian Paradise. That's editorializing a little bit on my part.
What are they talking about? Talk about the stocks. Let's see. The net is actually like Cloudflare is one of the stocks that has crazy growth ahead of itself, but valuation is crazy. I mean, let's check net. So right now, I think next year they can get barely positive, profitable, and then look at these PE ratios. I mean, in 2025, they're still at a PE ratio of 100, over 100. I love the company really, but and what they do, you can really see them as a big future. So you can see for really the next years coming, it has crazy growth ahead of itself, and it has been doing really well. But I mean, if you consider 20 P ratio a reasonable number, you barely get to it at the end of 2029 with the current prices. Too much. But usually when things like that happen, I don't know, these growth stocks in my opinion have better chance of with these growth stocks you have better chance of beating the market. That's what I at least seen and read. I know that historically the value stocks have done very well, but I think the approach that the whole world is moving toward technology, tech, I think that will really put these stocks and technology growth stocks into place. It's just that you have to really find the good ones, obviously. Yeah. So I'm really looking forward to a day that I can get rid of some of my trades. Nano Dimension is one of them. It got hammered. So let's check. It got basically a swing of 68%. I'm right now an average of almost 10. So I'm thinking if it gets to, I mean, if it goes for another lower down, I might add to it for a hope that I can actually sell it back up. But again, I think it makes sense with the current inflation discussions to go toward companies which they have good earnings and they are more stable compared to something like Nano Dimension. And in my opinion, that makes completely sense in a market that we are actually trying. Let's check Lululemon. This is one of the stocks that yeah, I think actually Lululemon is one of the good ones. I actually could even discuss that they are better than Nike because Nike actually got some issue with China and Chinese government. That means that they had a lot of market there. They could lose it. So that is something to consider. At least I think the same thing happens with Tesla. What are these guys saying?
Out though, I mean, we are hearing from the automakers and other industries as well that some of the supply chain bottlenecks are starting to improve, particularly when it comes to chips. So during the second half of the year, maybe if that situation improves, maybe the conversation will turn back to demand to some extent, because if there is more supply out there, are we going to see consumers maybe being a little more choosy about which cars they're buying? And is that going to make a difference for Ford and GM and Tesla for that matter? So I'm really curious to see what ends up happening with those car buying trends when things return to quote unquote normal, but also as Ford and GM do have those more electric offerings.
Yeah, and let's talk a little bit more about the electric offerings, and we teased it a little bit, but Nikola started this last year. Comments by company's founder Trevor Milton on what they were and weren't doing were widely criticized. Company then said not all of it was true, and now Milton's not associated with the company. Well, the saga at Lordstown has taken a similar shape. Former CEO Steve Burns coming on various media platforms, including ours, talking about 100,000 orders for trucks. Then they roll that back. Then Steve Burns goes on CNBC wearing a hard hat, trying to talk about manufacturing capability. Brian Sozzi, earlier this week, the company replaces Burns and its CFO, and now the interim leadership has screwed up communication yet again on what orders have and have not been made with Lordstown. Company disclosing another update yesterday. What is going on here?
Yeah, well, essentially you had an executive the day before they came out with this SEC filing yesterday, I believe before noon or right around noon, walking back what that executive had to say in terms of pre-orders, essentially telling investors you can't believe what he said. So very strange, bizarre week for Lordstown Motors, not a week that I've seen in some time from a publicly traded company. You see the stock up about 3% this morning, but the read overall is that Lordstown probably needs an entirely new management team. They probably need an entirely new board of directors too, to fully clean house and try to chart a path to surviving into 2022. Very important that this company starts to raise cash very, very soon, or they're just not going to be in business. That said, I do appreciate Lordstown president who made those comments, Rich Schmidt, following me on LinkedIn. You know, I hope he comes on the program and talks about the company.
I don't even know what to say about that. I was just going to say, it's interesting to me in these situations where we're talking about new tech that people are excited about, that could potentially be more environmentally friendly, et cetera. It's sort of disappointing then when you don't have the execution to get the stuff to market and to get the stuff done, but for what that's worth. Want to turn to some headlines that we were watching as well in the world of business outside of what we've been just talking about. And we start with Juneteenth. Today, for the first time in the United States, Juneteenth is being commemorated as a federal holiday. President Biden yesterday signed a bill to make June 19th the first established federal holiday since Martin Luther King Day in 1983. But since it falls on a Saturday, most government workers are going to get paid time off today. We also had some companies announcing last-minute closures. And banks like JP Morgan, UBS, and Wells Fargo will give employees a so-called floating holiday that they can use today or at other times. U.S. stock exchanges, meantime, obviously are open. We've been talking about trading, but they said they'll consider whether to close beginning next year. Snap is removing a speed filter from Snapchat 8 years after introducing it. That filter allows users to clock their speed and overlay it on a photo or video. It has long been blamed for encouraging reckless driving and has been linked to several deadly car crashes. Snap, in fact, is still enmeshed in some court cases stemming from some of those crashes. The highest paid female athlete is taking some more time off. Naomi Osaka said she will not be playing Wimbledon. This after last month she stepped away from the French Open, saying her mental health was under threat from the stresses of the tournament, including post-match press conferences. She does plan to return to the court for the Tokyo Olympics. Rafael Nadal.
Yeah, all right. Let's get back to stocks. All right, so what we are seeing is that the market, again, as I said, it's not convinced where to go. It's really bobbing. Let's check NASDAQ. So it's really now creating this sort of a wedge, as you can see, and it's gonna break somewhere. Hopefully it's up, but of course when people get spooked easily, so of course you would expect this move to be downtrend. US 100 here, so yeah, I mean, you can expect this to come back a little bit. It's not a big deal. I actually don't mind having a little bit downtrend so that I can add even more to some of my favorite stocks. But how's Tesla doing? Speaking of favorite stocks, hint hint. No, actually Tesla is not my favorite stock, but I really like it. So come on, JD, you can do better, or you can do worse, basically. For me, it's actually very interesting if I can buy JD more, because I think this move is absolutely ridiculous. I think when you have really easy 30, 40, and I don't think you will keep JD at these highs. I think JD will go up way more than what we are seeing at the all-time highs right now. But I think it's a fantastic company with a lot of growth ahead of it. I think 20% growth every year for the next 5 years. Yeah. What else do we have here? If you have any specific stock that you like us to check, you can just post it now. But before that, let me go back to some of our... was it AMD that I wanted to see? I'm gonna wait before actually putting more money into AMD. Baidu hasn't decided yet where to go. Maybe is going back a little bit. And this 200 EMA has been playing a very good role in keeping this thing down. Will it be able to do that again? We don't know. Lemonade, right? Okay, Workhorse is down. Where is AMC? AMC is down. AMC gave up again. AMC actually went to 65, but it gave back again. Maybe some profit taking now, but I mean, every time that AMC goes higher and higher, it really gives a, a heart attack to the hedge funds. But what I want you to remember is that the hedge funds are not idiots. They're actually very smart. They anticipate these movements, so they might do different tricks to actually scare the retail investors to sell. I'm not gonna tell anyone to buy or sell. I'm just saying that understand the risk and understand that what kind of trade you are getting into. And if you want to be successful, you have to be in it. But if you want to go in it or not, that's your decision. So as we can see, some of the momentum stocks are moving more heavily towards the downside, and yeah, this is 5. Let me go to 4. Okay, let's check crowd. still people are discussing about this, arguing on whether they have to go into AMC, GME. It's everyone's decision. So Tesla, it's down again. Go to 150, please, I beg you. Okay, you can see that the move toward downside is getting heavier. So I think we went to minus in our portfolio right now for the day. We are obviously down. Yeah. I think I don't see any AMC. Ooh, AMC.
We're down 68.5% when compared to May 2019, a slight improvement from April when the visit gap stood at 70%. So you can see that it is very slow, clearly still a long way to go, but progress is being made nonetheless, with May coming in as the strongest showing for AMC since the pandemic began. Now, if we take a look to Memorial Day weekend, which is often viewed as the official start of the summer blockbuster season, visits were down 49% and 46% comparatively to Memorial Day weekend 2019 and 2018 respectively. Now, Placer.ai added that theaters saw a drop off in foot traffic as the weekend continued, which normally doesn't happen, especially with the long holiday weekend. But once again, we're seeing that shifting consumer behavior. But let's zoom in to those week over week numbers. And you're seeing on your screen there that the week of May 31st, that Memorial Day weekend holiday, visits were down just 50.4% when compared to that same week in 2019. Now, that's by far the strongest turnout AMC has seen since the pandemic started. So it appears that traffic is picking up, and that momentum did carry over into June. We had In the Heights, which debuted last weekend. Now, that did have a bit of a disappointing box office performance, but still something new that consumers can go out there and see. And that hopefully that new movie slate is going to continue throughout the summer into the second half of the year, because that has been one of the biggest challenges here, is that there really hasn't been a lot of new content. For Memorial Day weekend this year, for example, only 6 new movies were out. That's less than 50% what's normally out there. Normally we have 12, 13.
Thank you, man. Thank you, man. It means a lot.
So it's something
I'm happy that you like the content. Thanks a lot.
Coming up, so that's hopefully going to increase optimism as the year continues.
Yeah, give me a little more insight into the rest of the year with the more blockbusters coming up. I mean, for example, this probably wasn't going to be a blockbuster, but we just heard that Disney Plus is going to release the Beatles documentary, the new Beatles documentary, on Disney Plus, not in theaters. And I wonder how many more of those kinds of things we're going to see.
Right, there's that challenge. There's also the challenge of hybrid releases. We saw Cruella make its box office debut, but it was also available on Disney Plus for that $30 rental fee. And In the Heights, although it didn't perform that well at the box office, was free on HBO Max if you are a subscriber. So that is definitely a challenge. We also have some theater chains that are still shut down due to the pandemic, with some having limited capacity. So all of those are something that people are keeping in mind as they make their box office predictions. Now, Bloomberg Intelligence did have a recent note saying that ticket sales in 2021 could reach $5 billion. Now, that is higher than most estimates out there, but they did caution that we're never going to get the numbers that we saw in 2018 and 2019. And if you remember, in 2018, that was a record year, $11.9 billion domestically. 2019 was not that bad either, with 11.3 billion. So because of that shortened theatrical window, because of the changing consumer behaviors, because of all of those challenges, the industry as a whole has changed. And I think that's what all of these theater companies are grappling with. I don't think it's a dagger in the heart. I don't think we're going to see theater chains disappear, but it's certainly going to be different, and it's not going to be the way that it was. Me personally, I love going to the theater. I'm going to continue to do that. But as a whole, as the outlook for the box office, as people continue to make their predictions, they're all taking that into account, because things are just different now. COVID-19 has changed a lot of things, and theaters are no exception.
Most definitely. Allie, thanks so much. I won't be going to any movies this weekend. For what it's worth. Take care. We'll talk to you soon. All right, we're going to take a break. When we come back, the changing face of retail trading. We'll talk to the co-CEO of Public Dot.
Yeah, all right. Some of the things I'm looking is that I really wanted to have Redfin, but I already have messed up on some of the investment that I've done, in a sense that I'm in some stock that they had a huge market down movement, and I'm not going actually to sell them because I think they're gonna be back, and I don't want to lose money. It just that it makes it a bad investment because you put your money for a long time in something that I could have made much more. But other than that, I'm actually looking at some of the stocks to actually add to them. Like, I mean, this is the list, and I actually want to. King? Is it DR King? Was it the Draft King? What is it? DKNG. G. So I'm actually looking at this at 40, and then Upwork is also at 40. We're gonna see actually. Let's actually check DraftKings. Interesting. Let's check the forward P ratio. All right. Takes them to the almost 2025 to go positive, and okay. When that happens, that means that I want only this to go to 40. So that is really my take on this. But anyway, drafting for me was not a long-term investment. It was more of a trade. I think it has to get back to this 70, 80. But if some legislations actually go through, I think it will get there. And that's where I'm gonna actually take my money out. I don't care if it goes to literally to moon or not, but not literally, figuratively. But really, even if it goes to crazy valuation, I don't care. I just wanna have that in that range. Right. I don't think there is much else of movement. I think the market has gone more into the downside now. Not a crazy move. Not a crazy move. I actually see this as another buying opportunity. I'm not saying that today is the day. It could be that next week we go lower. But I honestly think that starting from end of September till end of the year, we can actually have a couple of months of really good actually market. So hopefully that's correct. This is basically where I've been seeing and estimating where the money will be going during that time. But again, of course, no one can predict the future. Otherwise, we would have been like millionaires by now. But anyway, thanks everyone for joining. Really appreciate your comments, really appreciate your time being here. I will be back with you at market close, probably only a half an hour stream. If you'd like to join, absolutely feel free to do so. If you have enjoyed the content, I appreciate if you can follow us. It's free and it helps the channel. If you're if you are watching us on YouTube, please like and subscribe. It will really help the channel to grow. And thanks guys for your time again, and talk to you soon. Have a nice day, and those of you who won't be back for market close, have a nice weekend.